This is Robert Kraft coming to you live on SNN Live, and we're here at the Microcap Conference 2015 in Philadelphia, Pennsylvania. With me right now is Nate Tobik from oddballstocks.com and CompleteBankData.com. Nate, welcome to SNN Live.
Thanks for having me.
So in this Wall Street View, I wanted to cover something that you were talking about last night at the reception, which was about banking microcap stocks. So Let's talk about the industry at large first, and then we'll go from there.
Great. So banks are in a really interesting position right now because there's this push by regulators to consolidate. So there's 6,300, 6,400 banks in the U.S. About 3,000 banks have below $1 billion in assets. And the $1 billion in asset threshold is really where a bank is considered to have enough scale to be profitable and to be able to deal with the compliance issues. So regulators are pushing these banks to be at $1 billion, and that means there's going to be a lot of mergers, there's going to be a lot of consolidation to get to that $1 billion threshold.
So what about that makes that interesting to a microcap investor audience?
Right. So if you look at the banking space, there's about 1,200 banks that are traded, and of those, about 500 to 600 file with the SEC, and 600 are OTC traded banks. It's actually more than 600. So most of these are small banks. There's only about 300 to 400 banks that actually have a significant market cap. So almost all of the traded banks, the majority of those 1,200 are small microcap banks.
And tell me, like, where's the opportunity, specifically when you're looking at that industry within microcaps itself, we're talking about growth and value investing, so why is this a growth and value investing play?
So there's really two ways to look at this merger wave. And there's a lot right now, so there's a lot of banks that are just undervalued in general. And these are just cheap banks that you could buy. They're fairly boring. It's a bet on a local economy. But at the same time, there's also this merger play, which is you buy the cheap bank or you buy the bank that's going to be the empire builder. And then if it's the empire builder, you ride the growth wave. So they buy up small banks, they take out a lot of costs, the earnings increase, the market rewards them with a high valuation, and it just continues.
I was going to say, so on that note, when did you start covering the banking sector, and at what point did it become interesting where you wanted to now write about it for your websites?
Right. So I got interested in banks. I owned some before the financial crisis, not many. Primarily, I've been buying them since. And it was really after the financial crisis when I started to discover all these cheap banks. And there was just hundreds of banks at 50% a book, 50, 60% a book. And these were good banks. They had no asset quality problems. And so it was very intriguing that there was all these companies, all these banks that do the exact same thing in business, and you could compare them against one another and then build a portfolio out of these. And so it was after the crisis, probably 2012, 2013 was when I went from just investing in banks to really writing about them a lot more.
So I'm curious because in essence, so it seems there's a cyclical nature in that. So is that something to fear as an investor looking at the sector?
Absolutely. So, a lot of people say, I want a bank with 15% return on equity. I want a bank that's just killing it on earnings. And there were hordes of banks that were earning 15% of their equity going into 2008 that don't exist now. And so really, as an investor in a bank, it's a leveraged institution. You need to be watching out for asset quality and make sure that the management that's lending the money knows what they're doing. And so management quality is very important. Management that knows what they're doing, lending quality, and then just really the strength of the balance sheet of the bank. And at the first sign of trouble, it's better to sell and wait and see what happens than to just ride it into the ground.
So are there any qualities that are particular to management in this industry that we should be looking out for?
That's a great question. When I think of banking, versus other industries, banking is really an industry of exclusion. So you want executives who don't make mistakes. And if they don't make a mistake, the bank will do well. What I mean by this is they need to be prudent and conservative in their lending, because one or two bad loans could sink a bank if the loan's big enough. So they need to be able to walk away from a deal and not be aggressive looking for growth. And it's really that being able to say, we just want to avoid bad things. And if we avoid bad things and run an average business, this will now be an above average bank.
Okay, so let's talk about your background and a little bit about Oddball Stocks and Complete Bank Data.
Right, so Complete Bank Data is a financial information provider. We have data on every public bank, every private bank in the U.S. going back to 2003, and we have a number of tools and analytical tools built on top of that data. And then at Oddball Stocks, I write a lot about out-of-the-way securities that I term oddballs. And these are just companies that they're off the mainstream market. Sometimes they're deep value plays, or they're interesting securities, or they're just odd.
So for oddballstocks.com, so the companies that you're writing about, are they companies that you own or interested in? How does that work?
Sometimes they're companies I own that are attractive investments. Other times they're attractive investments that I don't own because maybe they don't fit in my portfolio, or it's too big, or it's something that doesn't really fit me personally. And then other times they're just investments that are interesting case studies, or just I feel like people should know the story in general.
So how did you get into all of this?
It's an interesting story. So I got a degree in computer science in college. I took one class in economics. I got a C because I skipped most of my classes, and I didn't care about finance or investing. My grandfather had given me a little bit of money after college that was in some stocks, and so I kept getting these statements month after month, and I wanted to know, what did I own? And so I started to read these books about investing, and I found that I had somewhat of a knack for investing. So I started taking the CFA exam. Interestingly, I took the first exam right past the wall here back in 2008, and I was spending all this time studying. I failed the second level, and I realized I would have been much better off investing my money and investing that time in companies rather than studying for this exam. So I started to do that, and at that time I thought, I need a place to keep this research. I'm not a great person in terms of organization. My wife would vouch for that. And so I thought, I'll just write a blog. No one will read it, but it's a place to keep my thoughts. And so that's what I did. I started writing Oddball Stocks, and people liked these out-of-the-way quirky investments, and from there it just grew.
And where can our audience go and find more information about your websites?
Right, so if you're interested in banking, and you can go to CompleteBankData.com. And if you're interested in some of these out-of-the-way securities, oddballstocks.com.
This is Robert Kraft coming to you live on SNN Live, and we're at the Microcap Conference 2015 in Philadelphia, Pennsylvania. With me again has been Nate Tobick from CompleteBankData.com and oddballstocks.com. Nate, thank you so much for coming on.
Thank you for having me.